Scott, I take great comfort. Let me start there. I take great comfort because I'm in lockstep with Steve Leisman. 3 rate hikes, and then, to use his term, pause and look around. But there's a key word Steve used, and it's resolution. I've said for some time we are in a correction, nothing worse. We're not in a bear market. We're in a correction. And what it takes to come out of a correction is resolution of the issues facing us, of which there are 2. One is, what's the Fed's path of rate hikes? Boy, that became a lot clearer today, and it will become even clearer after March 15th, which is only 2 weeks away. I can't tell you the clarity that will come out of Russia versus Ukraine, but I do feel confident that that conflict will become clearer, the outcome one way or the other, over the next 2 weeks. And that sets the stage for the economic strength, particularly in the U.S., to shine through. Accordingly, I have been adding to stocks over the last 2 weeks. You know, I raised cash earlier in the year. I've cut that cash level down in half to about 5% by buying cyclical and reopenings, whether it's the financials this week or Wynn and Paramount last week when you were out sick. I think you've got 2 more weeks to use your dry powder. And you know what? Scott? It's time to dust off the all-in moniker, because in 2 weeks I'm going to be wearing it again.
Wow. Interesting to hear from you, Jim Lebenthal. Kerry, the talk going in today was that Chair Powell had to thread the needle. Did he do that?
I think he's done a very good job speaking today, and it relieved the pressure that the market has felt about 50 basis points. I mean, there's a sigh of relief that you can feel. It's palpable. And, we're now trading at under 18 times next year's earnings. And, I've talked several times about all the stocks that are down, 40% from their 52-week high, or 50% or 60%. And now many of them are selling for under 25 times earnings. I ran a table today, and there's about 30 stocks considered high growth names that are trading at something between a 12 multiple and a 25 multiple. So you can start to look at names like Facebook, like Zillow, like PayPal, and nibble at them or add to positions. Be careful, though, because until we move above the 200-day moving average, or that's 2.5% or so away, or the 50 and 100-day moving average, those are levels of resistance. That's 5% away. So we need to do that carefully and deliberately, because the market is fragile here. But I think what Chair Powell has said today makes sense, and it gives us a feeling of kind of certainty, and that relieves that great uncertainty we're already feeling about Ukraine and Russia, despite Ukraine being GDP of half of Massachusetts. But we understand markets don't like war and don't like any uncertainty at all.